Much anxiety amongst Greeks right now. They want to see a firm resolve from Europe. They want to see a plan that's mapped out in the right way for the whole of Europe, and indeed this colossal debt restructuring exercise that has to go on with this country.
It's crunch time again for Greece. Eurozone finance ministers are meeting in Brussels to assess whether the country has met its obligations under the biggest bailout in history. Since 2010, Greece has received more than $250 billion in 2 international bailouts.
Dominating the skyline here in Athens, Greece's cultural jewel, the Acropolis, somehow symbolising the current need of the country itself, with massive cranes towering above it for structural support.
Crystal clear waters, ancient ruins basking in the sun, the taste of olives and feta. This is the Greece the world knows and loves. A paradise that draws millions to its shores. But beneath this idyllic surface, a different story is unfolding. A story of struggle, of displacement, and of a quiet crisis that is making life for the Greeks themselves nearly impossible.
Crisis is a terrible thing to waste. Have Europeans made the most of this one? Another last chance summit to save Greece underway, and according to who you believe, it's also a summit to save.
Living in Greece is harder than you think. In 2017, buying a home in Athens would set you back around €1,300 per square metre. Today that price has surged, with some reports in mid-2025 showing averages around €2,500 per square metre. This isn't just a housing problem, it's a cost of living crisis, a rental crisis, and a demographic crisis. The pressure isn't coming from where you might expect. It's a tide of tourists, digital nomads, and wealthy foreign investors, reshaping the very fabric of Greek society. Entire neighborhoods have been hollowed out, with homes once filled by local families now reserved for tourists. Why rent to a Greek family for €500 a month when you could make that in a single week from an Airbnb guest? The result? A silent exodus. Since the Great Debt Crisis, hundreds of thousands of young, educated Greeks have packed their bags and left. This isn't just about economics. It's a slow-burning shift that threatens to redefine what it means to live, work, and belong in Greece. So, how did this paradise become so unattainable for its own people, and is there any way back? This is the story of how living in Greece became impossible. To understand the crisis of today, we need to rewind. The story begins not with collapse, but with a boom. After emerging from a military dictatorship in the 1970s, Greece's new democratic government was on a mission to deliver prosperity, and deliver it did. With borrowed money, highways were paved, hospitals were built, and public sector jobs became a source of security for a generation that had known hardship. It felt like progress, a long-awaited arrival into modern Europe. But there was a fundamental flaw in the foundation. This newfound prosperity wasn't being paid for. Governments, one after another, borrowed relentlessly. It became a habit, a political necessity. No one wanted to be the one to turn off the spending taps. Public debt ballooned, more than tripling, in the 1980s alone. At first, the alarm bells were faint. The economy was growing. Besides, other European nations were also borrowing heavily. But Greece's debt was different. A huge portion of its economy operated in the shadows, on cash. Tax evasion was systemic, a national pastime almost. While the wealthy found sophisticated ways to avoid contributing their share, the government was giving with one hand and unable to collect with the other. By the time Greece was set to join the Eurozone in the late 1990s, its debt-to-get-to GDP ratio was nearly 100%. For a nation overspending and under-collecting, it was a ticking time bomb. In 2001, Greece adopted the euro. For a while, it was a party. Access to the Eurozone's cheap credit masked the deep-seated problems. The money flowed and Greece kept borrowing. But then, 2008 happened. The global financial crisis sent a shockwave across the world. Investors panicked, pulling their money from any perceived risk. For Greece, a country utterly dependent on foreign loans, it was a death sentence. The credit lines dried up overnight. The country was out of money. And here's where the euro, once a symbol of progress, became a trap. In the past, a country in this position could devalue its currency to make its exports cheaper, or simply print more money to pay its debts. But as a member of the Eurozone, Greece could do neither. It had no escape route. The collapse was brutal. Between 2009 and 2014, the Greek economy shrank by over a quarter. This wasn't a recession, it was a depression. To this day, Greece's GDP has yet to return to its pre-crisis peak. Unemployment skyrocketed to nearly 30%. Pensions were slashed, wages were cut, and public services disintegrated. By 2010, Greece was forced to accept the first of several massive bailouts from the European Union and the International Monetary Fund. But this financial lifeline came with savage conditions. Greece had to implement austerity. 1 in 4 public sector workers lost their jobs. Those who remained saw their pay cut by as much as 30%. The public healthcare budget was decimated, leaving the sick and vulnerable stranded. To raise cash, the government turned to its last resort, selling off the family silver. Public assets, airports, refineries, waterworks, even the national power grid were privatized. The historic port of Piraeus was handed over to a Chinese company. German conglomerates leased regional airports. For the average Greek, the message was painfully clear. The country might be called Greece, but it no longer felt like it belonged to them. In the ashes of the crisis, Greece turned to the one industry it had left: tourism. With its thousands of islands and epic coastline, it was a natural fit, and they went all in. The strategy worked, perhaps too well. In 2009, fewer than 20 million tourists visited. By 2024, that number had more than doubled to over 40 million, bringing in tens of billions of euros. Tourism now fuels over a quarter of Greece's entire GDP. On the surface, it looked like a recovery. The news was filled with images of sandy beaches, not protests. But this recovery was built on shaky ground. The jobs created were often low-paying and seasonal. Then, in 2013, the government doubled down with the Golden Visa program. The deal was simple. Spend 250,000 euros on property and you get a 5-year residency permit. It was designed to attract foreign investment, and it did, pouring billions into the real estate market. But here lies the dangerous trade-off. Most of these investors weren't buying homes to live in, they were buying a European passport and a profit-making asset. An astonishing 94% of properties bought under the scheme were repurposed as rentals. This had 2 devastating effects. First, thousands of homes were pulled from the local rental market and converted into short-term tourist lets on platforms like Airbnb. Entire apartment blocks were gutted, renovated, and listed for tourists. Finding a long-term lease became a nightmare. Second, it created a 2-tier property market. The buyers were no longer local families, but international real estate funds and visa hunters with deep pockets. They could outbid any ordinary Greek. Demand spiked, and prices went into orbit. Between 2017 and today, property prices in Athens have soared. Rent has become completely untethered from local incomes. In the first half of 2025, rents in Greece surged by over 11% compared to the previous year, the fastest rise in Europe. For the average Greek, whose wages have stagnated, this has been a catastrophe. Many now spend over half their income just on rent, with the average renter in Greece spending 35.2% of their income on housing, far above the EU average of 19.7%. The result is a slow, painful displacement. People are being priced out of the neighborhoods where they grew up. It's no surprise that protests against the housing crisis are now a common sight on the streets of Athens and other cities. The government has tried to intervene, raising the golden visa threshold in high-demand areas to as much as 800,000 euros and restricting new short-term rental licenses. But for many, these actions are too little, too late. The damage has been done. The human cost of this crisis is immense. Since the crisis began, more than 500,000 young, educated Greeks, doctors, engineers, teachers, have left the country. This brain drain is crippling the nation's future. With so many young people leaving, Greece's birth rate has collapsed to one of the lowest in the world. But the story doesn't end with foreign investors and tourists. The crisis was also enabled from within. While millions of ordinary Greeks were forced to tighten their belts, the country's political and economic elite saw an opportunity. When national assets were sold off at bargain bin prices, they were first in line, often partnering with the very foreign investors driving the speculation. The same networks that had benefited from the debt-fueled boom were now profiting from its bust. They were making fortunes from basic needs, from the very infrastructure their fellow citizens rely on. This has led to a society of stark inequality, where the richest 20% of households receive more than 40% of the total income. And while all this was happening, wages for ordinary people remained stubbornly low. In 2025, the minimum wage is just over €968 a month before taxes. After rent, there is little left. The painful truth is that in Greece today, a tourist on a week's holiday often lives a better life than a citizen who works there year-round. In the heart of Athens, luxury Airbnbs sit empty for much of the year, waiting for the next visitor, while Greek families are pushed into cramped apartments on the city's fringes. Greece's story is a cautionary tale. It's a warning of how a nation's soul can be sold off piece by piece in the pursuit of a flawed economic model. It shows what happens when a country prioritizes transient visitors over its permanent residents. This isn't just about numbers on a balance sheet. It's about the teacher working 2 jobs to make ends meet. It's about the young couple who can't afford to start a family. It's about the thousands who felt they had no choice but to leave their homeland behind. Claims. The question is no longer whether Greece can be saved. The question is, for the people who once called it home, will there be anything left to save? Will they even recognize it if they return? Or will they return at all?